Hi class, today we're going to be looking at problem 16b in chapter 5. I'm sharing my screen with you now, and we're going to be Monroe Trucking Company, and we're going to be preparing a Form 940 form for FUTA taxes. This is a tax return that we have to file for FUTA taxes. And the important information that they've given you in this problem is that the FUTA tax liability for each quarter, they've already calculated that for you, and the amount is $97 in quarter one. In quarter two, it's $87. And in quarter three, it's $69.70. And in quarter four, it's $59.50. The important thing to know about this problem is that in each of these quarters, all of this combined together does not equal $500. So since the net FUTA tax liability did not exceed $500, the company was not required to make its first deposit of FUTA taxes until January 31st. So there's a rule when you're preparing tax liabilities for FUTA taxes, and that rule is that until you've accumulated $500 in FUTA taxes, you don't have to deposit those until you reach that $500 mark within the year, or at the end of the year, you just pay the full amount that's owed for FUTA during the year if it's under $500. So in this particular problem, all of these quarters added together did not equal $500. And so the company was allowed to make its deposit of FUTA taxes when the tax return was filed. Another thing that's important to look at is the amount that was paid to the employees for this company. And this company had employees in the state of Texas as well as Louisiana. They paid a total of $75,600. What's also important in this problem is that you are aware that if employees are paid or the employer contributes to an employee's 401k plan, the retirement plan, these contributions are not subject to FUTA taxes. And so we're going to subtract those off of the total wages that were paid before we would get the taxable amount of wages that we would apply the tax rate to. We also have to remember that FUTA has a ceiling of $7,000. So the first $7,000 that is paid to the employees is taxable for FUTA purposes. But anything above that is not taxable. So what they've told you, rather than showing you each employee and the amount that they were paid during the payroll period, they've told you how much of the payments are made to the employees in excess of the $7,000 ceiling amount. And that amount is $22,150. In other words, what we would want to do is take the total wages paid, subtract out the payments that are in excess of $7,000, which are $22,150. And we're going to also subtract out the amount that was contributed for the retirement plan. And what's remaining will be taxable for FUTA purposes. So if we scroll on down, you can see here that what they're going to have us doing is filling out a return for the 940 form. That is the employer's annual federal unemployment tax return. So when we pay FUTA taxes, we're going to have to fill out one of these forms and send it in annually. Let me restate that. All employers who are subject to unemployment taxes will have to file a 940 form annually. When they deposit their taxes, the amount that they owe to the government will depend on the amount of the tax liability for that quarter and how long it takes them to reach $500 in taxes. So this is just the return itself. This is not the deposit that I'm talking about here. This is Form 940, which is a report of the amount of taxes that you're liable for. Now on here, they had a blank that you needed to fill out, and there's a drop-down arrow, and what the answer is none of these. This blank right here didn't make a whole lot of sense to me. It was asking you the type of return, and that this particular employee didn't have any special situations given to them. So that's the only thing I can think of as to why they put that there. But just make sure you check none of these. Then someone in the company would have to record the employer identification number. They already did this for us in Cengage, and that this was the Monroe Trucking Company, and this was their address, and this is the state that they were operating out of. And in part one, it's just telling us about the return that your company has to prepare. And it says, if any line does not apply, just leave it blank. And so answer these questions, in other words. In part 1A, it says, if you had to pay state unemployment tax in one state only, enter the state abbreviation. You'll remember that we were paying in 2 different states. So in 1B, if you had to pay state unemployment tax in more than one state, you are a multi-state employer. So you're going to check that there. And this is not a credit reduction state that we're working with. There is a form or a table that they have in your textbook that will tell you if you have a credit reduction state. And for this year, the only credit reduction state is the U.S. Virgin Islands. So we're not the U.S. Virgin Islands. This company is located in Texas, and they have wages that come from Texas and Louisiana. So we're not a credit reduction state. If you are, then you'd have to fill out a different part of this form that we will talk about in just a minute. In part 2, we need to determine your FUTA taxes before any adjustments. So in line 3, they want you to write down the total payments to all employees, and that was given in your instructions. So the total payments to all employees was $75,600. So that's what we would enter here. In line 4, they want the payments that are exempt from FUTA tax. And then down here, they've got check all that apply. And this is retirement pension. We did have some 401k plan that this company contributed to, and the amount of that was $1,250. So I'm gonna put $1,250 here and click on retirement pension. That's what it was about. The total payments made to each employee in excess of $7,000 was also given. And that amount was $22,150. And it's always a good idea to check your work just to make sure you're entering in everything correctly. Hopefully I don't have any typing errors or keying errors as they're called now. And we're going to go on to line 6. And line 6 says we need to subtotal line 4 and 5 and combine them together to find out what's in line 6. So put in your calculator 1,250 plus 22,150, and that will give you 23,400. And you'll remember those are not subject to FUTA. So what they're going to ask you to do is to subtract line 6 from line 3 to get what is subject to the FUTA tax. So I'm going to put in 75,600, and I'm going to subtract from that 23,400, and that will give me wages that are subject to FUTA tax at 52,200. Then we need to determine our FUTA tax on that 52,200. So you're going to multiply it by 0.006. So 52,200 times 0.006 is going to give you $313.20. Now notice that $313.20 is the amount of FUTA taxes that you owe. It is not above 500, but you do have to pay that at least once a year, and that's the total amount for the year that we're going to have to pay. So in part 3, it says determine your adjustments. If any line does not apply, just leave it blank. If all taxable FUTA wages you paid were excluded from state unemployment tax, you're going to multiply this by 5.4%. And they made no mention of that in this problem, so we're just going to leave line 9 blank. We're also going to leave line 10 blank and line 11 blank too. None of this applied to this particular company. So what I'm going to do is I'm going to skip to part 4, which says you're going to determine your FUTA tax and balance that is due, or the amount of your overpayment if you had any. Line 12 is total FUTA tax after adjustments. Well, we didn't have any adjustments here that we made, so we're going to combine everything from line 8 all the way through line 11, and that will give us $313.20. And line 13 says FUTA tax deposited for the year, including any overpayment applied from a prior year. They didn't mention any of that at all. So I'm going to move on to line 14. And it says if line 12 is more than 13, enter the excess on line 14. If line 14 is more than 500, you must deposit your tax. If line 14 is 500 or less, you may pay with this return, which is what has happened here. We need to pay this amount of tax with this return. There was no overpayment. And in part 5, it says report your future tax liability. Notice this is not deposits. They just want the liability by quarter if line 12 is more than 500. So I'm going to go back to line 12, and you can see that it's less than 500. So we don't have to write anything at all in here. We just go on to part 6. And in part 6, they're asking you, do you want to allow an employee, a paid tax preparer, or another person to discuss this return with the IRS? And in this case, just tell it no. Just say no there. And then you would enter the name of the person if you did want it, and their tax ID here, but we're just going to say no to that. And then you want to make sure that your return is signed and that his phone number is in there. And that's all you had to do for the 940 form. Now 940 has a Schedule A that's attached to it. And basically they just want to know what states the company operated in. And they operated in the state of Louisiana. So they would check that. Notice it's already been done for you. And they also operated in Texas. So we would find Texas and check that box. And that's all there is to this particular problem. So let me check my work one more time just to make sure that all the amounts are correct. And that's all you had to do for this problem. Remember, basically in this problem, since there was no tax liability over $500, we did not have to make a tax deposit until the 940 form was filed and on the filing date, which would be January 31st. And I'm going to stop right here, and we will see you again next time. Bye-bye.